Yo, 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 what is up, guys? Welcome to Technical Throwback. It's your boy Colio and
AP, what's up, guys?
all right, what's
Let's
good?
get it.
Let's hop on these charts. We'll make this one quick. Just a quick throwback here. Obviously, from Monday's analysis, we touched on Euro, we touched on UCAD, and we touched on GBP, JPY. So now we can really kind of see where everything was taken. So as you guys can see, Euro did fall. It made a nice little stop hunt here at 122.50, and then FOMC, which JP is going to touch on, came around, and I mean, this thing absolutely shot up. It pulled out of the stop hunt zone. Right, it pulled up above 123, and we saw this thing pop all the way up to a high of 123.87 yesterday, before making a nice smooth retracement down back into the 123 zone, and once again another rejection. Right, so my personal prediction, as far as tomorrow, we can see this thing either consolidate or we can see it rise higher. Okay. So that's pretty much the majority for EU. Long-term profit target on this is going to be 126. And with that, the analysis, if I remember correctly, played out pretty on point overall. So let's hop on to GBP JPY next. So GJ, we said sell. It's a sell, right? It turned out into a really nice sell here. First, we saw the beginning of, I believe, the beginning of the week, if I'm looking at this correctly. No, I'm not looking at this correctly. Let's see. Yes, I am. Okay, the beginning of the week, we saw a couple bullish days. So these two bullish days over here, it popped up higher. It did a nice stop hunt, and after that, it hit the 150, got suppressed from there. Bearish movements downwards. So after the G20 meetings, after the FOMC, after all of the BS finished, we saw it really resume the technical trend that it's been trying to kind of continue down. So it's testing this level again. I am expecting a breakout, just because this is a high moving pair, and we didn't see, if we take a look at the weekly chart, we didn't really see all that much movement as far as it getting anywhere, right? So because it came all the way up here, and it stop hunted 150, I believe that the retracement to 150 is now complete, and now we're seeing a rejection off of a higher time frame 38.2. You guys, it's pushing down, and I'm expecting the downwards push to continue. However, let's be aware of the fact that we may see a rejection first, prior to the continuation. So this can retrace up first and then pull down for the next move. Okay, and that is GBP JPY. You guys, absolutely destroyed this pair. This week, the entire team, JP and I, both of us made over 100 pips on this pair easily, well over 100 pips off of a single trade, right? Single trade, and we had a couple different trades on it. So GJ, analysis, we can put a little check next to that. We'll do a little green check. Played out. So anyways, USD CAD. So USD CAD, this is actually a sell limit that we put in the other night. It did not hit the sell limit yet. I'm going to go ahead and remove this right now for analysis sake. But the original prediction from Monday was that we would see a touch in the 131.33 area, okay? And it actually did come up in that area. It popped up to 131.25, you guys. It was within 7 pips of that 133, and from there it absolutely tanked. Okay, so that was a really big thing. If you did manage to catch this, kudos to you. If not, no biggie. It should give us another opportunity here. But from here down, we saw this thing drop about 270 pips or so. So absolutely beautiful analysis, played out just as predicted, and we should be seeing lower lows on UCAD for a while. Okay. For a while. The next target we're looking at, next short-term target, is going to be under a break of 128. We're looking at about 127.50 to break this previous significant low right here. Here we go, and to really hit that 127.50 area hard. So that is the next pit stop for UCAD. Those are the technicals, you guys. We're going to be doing a Market Monday on Monday, but with that, I want to throw it over to JP.
Okay, guys. real quick over to the fundamental analysis. So what happened this past week? Okay, Let's start with the euro against the dollar. Okay, most of those moves happened because of FOMC, right? So FOMC had really big effects this weekend, and also the G20 meetings, which is basically a group of 20 people, everybody coming together and talking a whole bunch of stuff, and then deciding on stuff that's really important inside these markets. If you look at FOMC, what happened was that the market, there's something known as sentiment, right? Sentiment is basically based on people, um, what people feel about the market. So what they think the direction is going towards. People, right? They have people, which cause sentiment, and then the market itself and the events, the facts, which are the fundamentals. Okay, so sentiment was pointing at an extra rate hike this year for the dollar. Okay, so people were really expecting that. That was on. Let me grab my calendar right here. FOMC was on Wednesday, past Wednesday. Okay, so that's when people were really expecting. Okay, what's gonna happen, right? What is gonna happen? Because we are expecting another rate hike, an extra rate hike. Eventually, news came out. They did hike the rates on Wednesday, right, by 0.25 as expected. If you go onto any of your calendars, your calendars have predictions, forecasts, which are basically made by big institutions like let me grab an example right here. Um, the Office of National Statistics. That is, let's say, for the pound, right? They do it for the pound. And so we have very reliable sources that are predicting these outcomes. But of course, you can only trade them when they come out. Okay, so I'm not advising you to trade just based off of predictions. You have to be active and near your charts when they come out. So they were expecting another rate hike, right? The traders, the market, but the Fed announced on the meeting, after the meeting, in the press conference, that they're not yet, right? They're not going to put another rate hike. They leave it at 3, which then which then caused the reaction for a bearish dollar. Okay, we all know bearish dollar means a bullish euro versus dollar pair. Okay, so we got this spike right there because of, you could say it, a disappointing outcome of the FOMC press conference, right, which caused it to jump. Okay, our access over the traders in action caught these moves because we do, right, from Market Mondays. We kind of predicted it. Technically, right, and fundamentally, of course, we have to wait till the last moment. But that is for the euro against the dollar. Okay, so that caused it to rise. Later in the week, we had positive news for the dollar coming out. Was it positive news? No, there wasn't positive news, which caused EU to drop. Basically, that is just people exiting their entries and their trades and stuff. They're exiting, causing it to drop back. And of course, the troubles with China and trade war solving a little also helped with the drop of the euro against the pair euro USD. So if we hop over to the pound against the yen now, right? We go to the reaction we had, which was the 22nd?
I believe so.
When it rose?
Good question. Let me check the calendar. Because it rose during FOMC. No, it didn't. It fell during FOMC, I think, right?
It rose the 19th.
Yes, the 19th. Yeah, that was when this big spike here. Yep.
Okay, so what happened on the 19th, right? That was the beginning of this week, Monday. We had the G20 meetings all day. Okay, what happened here was we got Brexit positivism. Damn. Okay, so basically what happened, they were talking about Brexit, and they kind of got an agreement, kind of, right, because it's never so sure. But they were leaning more on the positive side than they were on the negative side, right? So that was basically Brexit news, which was good news for the pound. Okay, so that caused the pound to rally in the beginning. So at the beginning of this week, basically after that, we just entered basic consolidation with the market fundamentals playing their role. Okay, so because of Brexit, positive, damn it, good Brexit news, yeah, we had a small consolidation area period for GJ going up to a key level, which was the 150. Yeah, and from the 150 touch, we got that bearish reaction down. Now on the 150 touch, which was the 22nd, which was yesterday, Wednesday, we had GDP news coming out. Was it at? Sorry, oh, I'm looking 21. There we go. Okay, 22nd, 8 a.m. in the morning, right? We had the bank policy and the interest rate if they're going to hike rates. So a Bank of England meeting, which was today, this morning, the 22nd. Okay, so early this morning, what happened was we got a rejection off of the 150 area, right? That's where we had our sell limits in place. From there, we got a wick entry going down because of news coming out for the pound. Okay, so basically the news that came out was for also a hike. Was it the hike? And it came out. Help me with this if I remember quickly. The interest rate hikes remained on hold, right? They remained on hold because of negative inflation data, which was CPI, which was what was that? I saw that number.
Let me peek.
Was that CPI? No, sorry, that's another pair. So negative news coming out this morning for the pound.
Retail sales.
I don't want to say. No, I don't want to say anything. Okay, let me just check this out real quick, so I don't say anything like off balance. That was this morning. Oh man, we talked a lot today. Today was lit.
Yeah. Group chat, you guys. Group chat was on fire all day today because we were busy taking advantage of all the moves, and all of our students were taking advantage of the moves as well. So a lot of percentage points gained across the board for everybody's account in net profit. A lot of good stuff. A lot of capitalization on GJ and EU as well.
I got it here. So basically, what happened inside the the monetary policy summary, which is basically Bank of England, a summary, a package where they write everything down, and the official bank rates they decided to remain on hold, right? So the Bank of England doesn't really that fast hike rates or cut rates or anything. They really analyze it closely, but people were expecting hikes, right? So if people were expecting hikes, then of course anything differing from that result is going to have a negative outcome, right? Unless it's more than they expected. So basically what happened in the meeting, there are 9 governors in the Bank of England, okay? So 7 of them voted to hold, so not to not to hike interest rates, and 2 voted to hike, which basically means that the 7 win, so they outweigh the 2, that the Bank of England is not going to hike rates. So because they didn't, we had the negative reaction that we had on GJ this morning. Okay, so if we go down, you see there, right there, we're on the hourly right now, the bullish reaction coming up, right? That's basically people exiting their trades, and from there, we go solo more down, because that's where we were in the trade already, right? So we decided to enter the trade off of the 150.
Oh, you're talking about the take profit at 148.50?
Yes.
Yes.
So people exiting their trades, right? Maybe some. So this is a fun fact for you. Maybe you can, use it in your future predictions. Hedge funds, right? Hedge funds have big ass accounts. Okay, if they have big accounts, it takes them a little longer to enter a trade. Or if they do, right, the spread is going to be so much that they enter the trade where they want to take profit. Okay, so if a big hedge fund decides to sell 1 million, right, before they sell, they would have to buy, right? So buy it for it to go up automatically because their account is so big, right? They just push the price up because they buy it. When price is up to a certain point, of which you see is the 149 right there, they then exit their buy and sell immediately, causing them to enter where they would have entered when they bought, and then to take profit where they will take profit, right? So if you understand that, I mean, that's good. If you don't, just leave a comment in the box below. We'll describe it further. So basically, what means that we went down from the pound because of interest rates, man. It was all like you see, waiting for Super Thursday, right, when the Bank of England released its summary and blah blah blah, and that was all the consolidation, like after Monday. For UCAD, same. I mean, FOMC, same as Euro, right? Same statement. What you want to look out for, though, tomorrow morning at 8:30, we'll have Canadian news, which is inflation data, and core retail sales data, which is basically important news for the Canadian dollar. And also for the dollar, we have core durable goods, which are the change in total value of new purchase orders placed with manufacturers for durable goods, excluding transportation items. Right, that's it for fundamentals. UCAD, same as Euro and JPY. Basically, the Japanese yen had no say, which mostly it doesn't, right? Because it's a safe haven asset. It's not supposed to be volatile at all. So those are the reasons. Fundamental reasons that the pairs did what they did. If we're looking for a longer term prediction, GJ expected to go bearish because of no hikes. Euro USD to go, was it bullish, right?
Yes.
Longer term, and then UCAD to go bearish as well.
Yep. That's it for technicals and fundamentals. Awesome.
Yes.
All right, guys, remember to subscribe, hit the little bell button, follow us on Instagram at Axia Unlimited, and get connected with us if you obviously want to learn to trade, or you're struggling, you need help, you need mentorship, et cetera, et cetera, et cetera. But with that, see you on the next Market Monday and the next technical throwback. Peace out. Have an awesome rest of your trading week. Remember, stay safe, risk manage, and kill these charts.